Hey, Stink. You got 10 more minutes to learn about financial literacy. Part 2. Investing in mutual funds. What beginners need to know. Yes, being presented by Black Girl Magic Masters LLC. You already know we're on a mission to restore our whole community financial. Well, hey class, remember last video in part 1, we stuck a pin in types of mutual funds. Now, you will need to go back and check out part 1. It's part 2 for a reason. And you know me, we don't do assummations here. We don't assume nothing in these parts. And so you need to go ahead and go watch that first video. But anyway, let's talk about it. We have 4 types of funds up here right here. We got the money market funds. And a money market fund, family, it's a kind of mutual fund. And when we say mutual, that means it's like, you know, if we were all mutual friends, you know, a mutual fund that invests in highly liquid near-term instruments, basically damn near cash, right? Money market funds, right? Then you have bond funds. Now, bond funds are just like stock mutual funds in that you put your money into a pool with other investors, and a professional basically invest that pool of money, you know. But anyway, next thing you have like balanced funds. Balanced funds, also known as hybrid funds, are a class of mutual funds that contain a bond debt component and a stock equity component in a specific ratio in a single portfolio, right? So these mutual funds help investors diversify their portfolio by investing in asset classes such as equity and debt. You know what I'm saying? Diversifying, you know, not putting your eggs in one basket. Anyway, then you got stock or equity funds. Stock fund and equity fund basically describe a type of investment company. Mutual fund, exchange traded fund, those are ETFs. Closed-end funds, UITs, unit investment trusts. These basically, they invest primarily in stock or equities, as contrasted with, you know, they don't do bonds. You know, they invest in stocks or equities, not debt, because bonds represent debt. Now, we're going to be talking about the language of bankers in our next videos, because I need for you guys to understand me when I'm talking to you and it don't sound so fucking foreign. Oh my goodness. But like, just like in today, like, I don't know if you're understanding what equity is. I really don't know if you understand what mutual means. I know I explained to you guys about liquid, but I'm not feeling like you guys are getting that. But we're going to move right along, right? So, there's some kinds of mutual funds. Or is it? Right? Like, this is what they typically say. Hidden fees and sales charges. A lack of liquidity, poor trade execution, or tax inefficiency. But I found this, ladies and gentlemen, that mutual funds do have hidden fees. Now, if fees were hidden, those hidden fees would certainly be on the list of disadvantages, right, of a mutual fund. But the hidden fees that are basically talked about or just piss poor or lamented upon are referred to as the 12B1 fees. Now, while these fees they're not fun to pay, they aren't hidden. They're not hidden. The fee is disclosed in the mutual fund prospectus. Remember we talked about that in past videos, because I needed y'all to understand what a prospectus was, because go back and look at the stocks video. Okay, anyway. And it can be found on the mutual funds websites. Now, many mutual funds do not charge 12B1 fee. Now, if you find a 12B1 fee onerous, invest in a mutual fund that don't charge a goddamn fee. Like, shit. So anyway, now, I'm sorry. If you don't like my cussing, this is not designed for those that are under 18, period, point blank, even though I'm pretty sure they're familiar with the sailor language. But anyway, and God is still working with me. All right? Now, 2. The myth is that mutual funds lack liquidity. How quickly can you get your money if you sell a mutual fund compared to the ETFs or stocks and closed-end funds? So if you sell a mutual fund, you typically have access to your cash the day after the sale. ETF stocks and closed-end funds require you to wait 2 days after you sell the investment. So the lack of liquidity disadvantage of mutual funds is a myth. Anyway, number 3, mutual funds have high sales charges. Should a sales charge be included in the list of disadvantages of mutual funds? Well, it's difficult to justify paying a sales charge when you have a plethora of no-load mutual funds. Remember, we talked about that in past video. Check out 1. But then again, it's difficult to say that a sales charge is a disadvantage of mutual funds when you have thousands of mutual fund options that do not have sales charges. Sales charges are too broad to be included on the list of disadvantages of mutual funds. Moving right along, y'all. Mutual funds have poor trade execution. Now listen, if you buy or sell a mutual fund, the transaction will take place at the close of the market, regardless of the time you entered the order to buy or sell the mutual fund. So the trading of mutual funds can be simple, stress-free feature of the investment structure. However, many advocates and purveyors of these ETFs want to point out that you can trade throughout the day with ETFs. Now, if you decide to invest in these ETFs over mutual funds because your order will be filled at 3:50 p.m. Eastern time with ETFs rather than receive prices at 4 o'clock p.m. Eastern time with mutual funds, I don't see it. 10 minutes, and that fifth, listen, let me just say this. The fact, some people say that mutual funds have high capital gain distributions. Now, if all mutual funds sell holdings and pass the capital gains onto the investors as a taxable event, then we have found a winner for the list of disadvantages of the mutual funds. But not all mutual funds make annual capital gain distributions. Matter of fact, index mutual funds and tax-efficient mutual funds do not make these distributions every year. Yes, if they have the gains, they must distribute the gains to shareholders. You know what I'm saying? 2, in addition, retirement plans, IRAs, 401ks are not impacted by capital gain distributions. There are also strategies to avoid capital gain distributions. Ask your boy like Trump, you know what I'm saying, including tax loss harvesting and selling a mutual fund prior to a distribution. Man, moving right along. Listen, you got diversification, economies of scale, there's divisibility, liquidity, management, less risk. Let's learn some terms. Diversification. That's the practice of building a portfolio with a variety of investments that have different expected risk and returns. Liquidity. It's a company's ability to convert assets to cash or acquire cash through a loan or money in the bank. It pays in short-term obligations or liabilities, right? Then you got economies of scale. A proportionate savings in costs gained by increased level of production. 2, or mergers may lead to economies of scale. Okay, whatever. Then you got management. That's decision-making and future planning. Then you have divisibility. It's the property of a good that can be broken into smaller amounts without losing value. And then you have less risk. Basically, buying assets that have low probability of incurring any kind of loss. Those are some terms I need y'all to understand. Now, you need to speak the mutual funds lingo, period. And that's why we did that. Now, there are some asset allocation models. You got the bull market, you got the bear market, you got transitional markets. You feel what I'm saying? And I think I should break down what the bull market and the bear market is. Y'all want me to do that? I love quoting my favorite guru mentor, Warren Buffett. He says, successful investing takes time. But he also noted that it takes discipline and patience. So when I say that I am very proud of you for sitting here for the last 10 minutes, 9 minutes, investing in your self-development, your personal development by just, gaining these tools, I really mean it. So class, what we're going to do is we're going to just end this mutual funds video right here. And we're going to get ready for class for the next video. I mean, because I'm sitting here like, whoa. Yeah, I got more for you. I'm on a mission to restore our people financially. I'm like the Flashdance. I'm like that young lady on Flashdance. I know that I'm just one. I know that I'm not affiliated with any sorority or no large organization. But what I did do, you guys, I came from nothing. I came from a single mom, and I put everything into what I know so that for my 2 children. So I think it not robbery to be the change I need to see in this world. Thanks for listening, class. See you later.